Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into Caterpillar's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Caterpillar's latest financial performance.
Let's get started with an overview of Caterpillar. Known as a global leader in construction and mining equipment, Caterpillar has just released its third quarter 2025 earnings. John, what are the highlights from this report?
Caterpillar reported a 10% increase in sales and revenues, reaching $17.6 billion. The adjusted profit per share came in at $4.95, slightly above the forecasted $4.52. The company also deployed $1.1 billion for dividends and share repurchases, showcasing strong cash flow management.
Revenue and profitability overview. Let's start with the top line. Caterpillar reported sales and revenues of $17.6 billion for the third quarter, marking a 10% increase from last year. John, what drove this growth?
The growth was primarily driven by higher sales volume, particularly in the energy and transportation segment, which saw a 17% increase. This was due to strong demand for equipment and services, especially in North America and Asia-Pacific regions.
And how did this impact their profitability?
Despite the revenue growth, the operating profit margin decreased to 17.3% from 19.5% last year. This was due to higher manufacturing costs and unfavorable price realization. However, the adjusted EPS of $4.95 exceeded the forecast of $4.52, indicating effective cost management and operational efficiency.
Segment performance analysis. Let's delve into the performance of Caterpillar's segments. How did each segment contribute to the overall results?
The construction industry segment reported sales of $6.76 billion, a 7% increase, driven by higher sales volume and favorable currency impacts. Resource industries saw a modest 2% increase to $3.1 billion, while energy and transportation led the charge with a 17% increase to $8.397 billion, thanks to robust demand in oil and gas and power generation.
What about the financial products segment?
Financial products revenue grew by 4% to $1.076 billion, supported by higher average earning assets. However, segment profit slightly declined due to higher credit loss provisions and SG&A expenses.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the future outlook. How is Caterpillar managing its operations?
Caterpillar generated $3.7 billion in operating cash flow and ended the quarter with $7.5 billion in enterprise cash. The company is effectively managing its cash, deploying $1.1 billion for dividends and share repurchases. CEO Joe Creed highlighted the resilient demand and focused execution across segments, positioning Caterpillar for sustained momentum and long-term growth.
What can investors expect going forward?
With a growing backlog and disciplined execution, Caterpillar is well-positioned for future growth. However, investors should keep an eye on potential challenges like manufacturing costs and global economic conditions.
Key takeaways. As we wrap up, Caterpillar's third quarter performance showcases strong revenue growth and effective cash management despite some margin pressures. John, any final thoughts on Caterpillar as an investment?
Caterpillar remains a solid investment with its strong market position and strategic initiatives. The company's focus on operational efficiency and cash flow improvement bodes well for long-term growth, though investors should remain vigilant about external economic factors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Caterpillar's performance in the comments below.